So what is a resistance level? A resistance level is a level where price starts dropping. Okay, it's a level that when price gets to that level, there's a high probability for price to pull back from that level. You see resistance as the ceiling in your room, okay? The ceiling is in your room is the resistance. If you bounce a ball in your room, when it gets to that ceiling, what happens? It pulls back right to the floor. So that resistance level or that ceiling is the resistance level. So it is expected that when price hits a resistance level, it should pull back from that level. Okay, so the level where price of an asset starts dropping is called a resistance level. Now, at the resistance level, supply increases and demand decreases. It means we have more sellers than buyers at a resistance level. Okay? And how do you identify a resistance level? When a bearish candle closes after a bullish candle, a resistance level is formed. When a bearish candle closes after a bullish candle, a resistance level is what is formed. Resistance level on higher time frame are more valid than resistance on lower time frame. Note that resistance levels on higher time frame are more valid than resistance levels on lower time frame. Now, resistance can be broken. A resistance level can be broken. The ceiling you have in your house can be broken, right? Also, a resistance level can be broken. Now, when price hits a resistance level, traders assume that that asset is overbought or overpriced. So when an asset is overbought, overpriced, what happens? There's a probability for price to start dropping because the demand begins to drop and supply begins to increase. So there's a probability for what? For that asset to begin to lose value. Okay? So when a resistance is broken, like I said, the resistance can be broken. When it is broken, it becomes a support. Okay, let me use paint to illustrate this. Okay, so these are the things you need to know about resistance. Okay, then we'll go to the chart and I'll show you examples of resistance levels. May you venture, you're welcome.
Yes, sir. Yes, sir.
Please mute your mic. So, this is how price moves. Okay. The highest level it gets to is called resistance, and the lowest level it got to before pulling back is called support. So price moved from this point to this point, and from this point, what happened? It dropped. So this highest level it got to before it drops is what? Your resistance. This is your resistance. Came down to this level, went back up. The highest level it got to before it dropped. This is your what? Resistance. price dropped from this level to this level, went back up. The highest level it got to before it dropped is your resistance. Drop to this level, went back up. This level becomes your resistance. And the lowest level it got to before price started going up is your support. Okay, the lowest level it got to before price starts going up is your support. So here's our support. This is support. This is support. And this is support. I hope you're following. So when price gets to a resistance level, it is expected to pull back before going up. Okay, before it continues moving in that direction, excuse me, it is expected to pull back. Okay, so let's go to the chart. So like I said, the level where price starts dropping is called a resistance level. And to be able to identify a resistance level, you need to wait for a bearish candle to close after a bullish candle. Okay, when a bearish candle closes after a bullish candle, that level becomes what? Your resistance level. So let me identify resistance level on the chart. This is a resistance level. Why is it a resistance level? Price started dropping from this level. That is why it is called a resistance level. You would see that a bearish candle closed after the bullish candle. This bearish candle must close before this level becomes a resistance level. Okay, we also had a resistance level at this point. This is a resistance level. Why is it a resistance level? Bearish candle closed after the bullish candle. That is why this level is called a resistance level. We also had another resistance. Why is this level a resistance level? This bearish candle closed after the bullish candle. That is why this level is called a resistance level. We also had a resistance level here. Why is it a resistance level? A bearish candle closed after a bullish candle. This is a resistance level. We also had a resistance level here. Why is this level a resistance level? This bearish candle closes after a bullish candle. We also had a resistance level here. Why? This bearish candle closed after a bullish candle. I hope that is clear. So that is how you identify a resistance level. When a bearish candle closes after a bullish candle, that candle or that level becomes a resistance level. I hope that is clear. Here we also had a resistance. This is a resistance level. Okay, after the close of this bearish candle, this level becomes our resistance level. Okay, now what happens? Okay, let's look at support. Okay, support. The opposite is support. Okay, when a bullish candle closes, so the support is just like the floor in your room. The floor in your room, you see that as your support. Okay, so when a bullish candle closes after a bearish candle, a support level is formed. So this is a support level. this is a support level. You are not supposed to be in this class, Kenny. This class isn't for you. This is not a market analysis session. This is for beginners. Okay, so this is our support. Why is this level of support? This candle, bullish candle, closed after a bearish candle. This level is a support. Bullish candle, closed after a bearish candle. This level is a support. Bullish candle, as you can see. This is a bullish candle after the formation of a bearish candle. This is a support. This is also a support. This is a bullish candle formation after the close of a bearish candle. This is also a support. This is a support. Bullish candle closed after the formation of a bearish candle. That's a support. This is also a support. Bullish candle closed after a bearish candle. Now, when the support forms, there is a probability that price will keep going up from that level. Okay, when a bullish candle closes after a bearish candle and a support is formed, there is a high probability that price will keep going up from that level. It indicates that there is high demand for that asset. It indicates that demand is higher than supply, as we have it here. As you can see, we're viewing the daily chart. After the close of this bullish candle, we had a support. What happened? Price went up. Look at what we have here. After the close of this bullish candle, what happened? Price went up, though it came down after the close of this bullish candle, right? It came down before going up. So there's a probability that when a support is formed, price will keep going up. Look at what we have here. We had a support here. What happened after the close of the candle? Price went up. Look at what we have here. After the close of this bearish candle, we had a bullish candle. After that, then this level becomes a support. What happened to price after the close of that candle? Price went up. So when a support is formed, there's a probability that price would go up. See what we had here. After the formation of this bullish candle, we had a support here. What happened on the next candle? Price went up. Can you see that? So that is how you identify support level. Bullish candle closes after a bearish candle. You identify that level as your support level. At support, demand is high. And when demand is high, price is expected to go up. At resistance level, supply is high. So when supply is high, you expect price to drop. Okay, and like I said, support and resistance level on higher time frame are more valid than support and resistance on lower time frame. Okay, so it's best to identify support and resistance level on higher time frame. If you're a swing trader, identify your support and resistance level on the monthly and weekly time frame. If you're a day trader, identify your resistance and support level on daily and 4-hour time frame. Okay, you could also work with 1-hour time frame. Please mute your mic. Okay, work with, if you're a day trader, identify your support and resistance level on daily and 4-hour. 1 hour, 15 minutes time frame should be for execution. The lower time frames should be used for execution. Okay. So how do you trade with resistance and support? Now, another thing you need to know about resistance and support is that resistance can be broken and support can be broken. So if a support is broken, that support becomes a resistance. It means demand turns supply. Okay. And when a resistance is broken, that resistance becomes a demand. That is supply turn demand. Okay, so how do you trade with resistance and support? Now, we're looking at Euro Aussie charts. Let me use live markets to explain. Okay, so this is Euro Aussie chart. Last week candle, okay, that was last Friday. You can see we had a support after the close of last Friday candle. This is the support. This indicates that demand is increasing. And what happened today in the market? What happened in the market today? Price went up. Euro Aussie appreciated in value, right? It went up. So after the close of this candle, one could have entered buy at the open of today's market, and it would have made some good profits on this trade. Okay, this is about 55 pips. You would have made a profit of 55 pips just by trading this support. Okay, now, like I said, when a support is broken, that support becomes a resistance. Okay, that support becomes a resistance. So if you had bought Euro Aussie, your stop loss should be below this support. Remember, before you execute a trade, you should know the price you're going to use as your stop loss. You should know how much you're going to lose on a trade before you execute a trade. It's very important. Okay, so you should know where you have to set your stop loss, how much you're going to lose on the trade before you execute the trade. So your stop loss should be below this support. It could be at the low of this candle. Anything that makes a candle closes below this support, there's a high probability that price will keep going down because that support has been broken and has become a resistance. So your stop loss should be below this support. It should be at this level. This would have been the best level to use as your stop loss. So if price breaks this low, there's a high probability that price will keep going down. And you don't want to hold on to your bullish trade, right? So you exit. Let's look at GBP USD daily chart. So you can see today, GBP USD has been bullish. GBP USD has been bullish. If today's candle closes bullish, there is a high probability that GBP USD would be bullish tomorrow. There is a high probability that GBP USD would be bullish. So it's either price keeps going up if today's candle closes bullish. Let's just assume the candle has closed for the day. It's either price keeps going up or price breaks this support. And if this support is broken, there's a high probability that price will keep going down. It will keep dropping. So after the close of today's candle, I would be looking for opportunities to buy GBP USD tomorrow. And if I'm buying GBP USD tomorrow, my stop loss will be this low or the low of today's candle. I hope you're following. Okay, my stop loss would be the low of today's candle or the low of Friday's candle. That is how you trade with support and resistance. Look at what we have here. We had a resistance at this level after the close of this candle. This is our resistance level. And what happened after the close of the candle? Price just dropped. Can you see that? Then after the close of this candle, we had a support at this level. And what happened after the close of that candle? Price did what? Price went up. Trading with resistance and support is very, very simple. Don't complicate things. Just identify your support, execute your trade. If you buy from support, you sell from resistance. It's as simple as that. Buy at support, sell at resistance level. Okay, now a support level is said to be strong. A support or resistance is said to be strong if that level has acted as a support in the past. If that level has been tested at least 2 times in the past, that support is said to be strong. What that means is that there's a high probability for that support to hold. That's what it means. Are you following? So for example, look at what we had here. I said if today's candle closes bullish, this level becomes our support. Let's just assume the candle has closed for the day. This level becomes our support. Now, if you go back here, you can see that this level was a support. Can you see that? It was a resistance turned support. Remember I said when a resistance is broken, that resistance becomes a support. The close of this bearish candle, this level here became a resistance, right? This level became a resistance after the formation of this bearish candle. And what happened? This candlestick broke out from this resistance. So this resistance has become a support after this candlestick closed above this resistance. So this is a support level. So what happened on Friday? Price tested this support level. Can you see that? Price tested this support level and there was a strong rejection from that level, indicating that there's a high probability that this support level would hold. Now, if you go back here, let's go back. You can see here we had a resistance level, right? This was a resistance level at this point. And what happened? This was the first candle that closed above this resistance. So this resistance has become what? A support after this candlestick closed above it. So you can see that price tested this support and also tested this support last Friday. That is the reason for this pullback, this rejection. 2 things will happen when price hits a support or resistance level. It's either price breaks out from that support or resistance, pulls back from that support or resistance level. So in this case, price pulled back from this support. So this tells you that there's a high probability for price to keep going up. So if today's candle closes bullish, you cannot sell GBP USD. You cannot sell GBP USD because price tested a support level and there was a strong rejection from that level. The only time you would sell GBP USD is when this support is broken. When this support is broken, that is when you will consider selling GBP USD. If you decide to sell GBP USD before price breaks out from this support, you will be taking a high risk. You would be taking a high risk, okay? So you have to wait for this support to be broken. And how do you know the support is broken? The candle must close below this zone, this support zone. That is, the body of the candle must be below this support. That's when you would say there is a breakout from support. Like what we have here. This is a resistance, right? This is a resistance. This candlestick broke out from this resistance. This resistance has become what? A support, because the body of this candle is above the resistance level. That is when we say there's a breakout from the resistance. And what happened after the breakout? Price started going up, though we experienced a little pullback. Pull back to the broken resistance turn support. So most times this would always play out. When there's a strong breakout from a resistance, price most times will pull back to that resistance that has become a support before it continues in that direction, just as we have it here. There was a breakout from that resistance, price pulled back and started going up. So most times this will play out. So if you don't want to wait for a pullback, you could set your stop loss few pips below the broken resistance on support. Your stop loss could be like 10, 20 pips below that level, because there's a high probability that price will pull back to that level. So you don't want to set your stop loss at that support level. That's the resistance on support. You don't want to set your stop loss there. If you had set your stop loss at this level, they would have hunted for your stop loss. Though your prediction was right, you didn't set your stop loss at a very good level. So you'll be kicked out from the market before price starts moving in your direction. I hope you're following. So that is how you trade with resistance and support. Now, for those of you who attended the previous session we had, I taught you on how to use candlestick pattern. Now, you can't just use resistance. Yes, it's possible to trade using resistance and support, but if you have other tools or other strategies you can use with resistance and support, it will give you more hedge. Okay, it will give you more hedge. So you've learned how to use resistance and support. Now you need to incorporate that. I hope you get me. You need to incorporate the knowledge on candlestick patterns with resistance and support for a better result. Are you with me? So look at what we have here. So when you have a candlestick pattern such as AMA, inverted AMA, doji, spinning top, when they form at a support level, there's a high probability that price would move in that direction. What do I mean? For example, what do we have here? We had a support here. What candlestick formation do we have here? This is a spinning bottom. A spinning bottom formed at a support level. This is a strong indication that this support would hold. This is a strong indication that this support would hold. So after the formation of a spinning bottom, you wait for the next candle to close bullish. So this is a strong confirmation that price will go up. Now let's look at this level. So after the close of this bearish candle, this level became a resistance level, right? So let's go back and see if that level was a resistance level in the past. That's what you should do. When a new resistance or a support level forms, identify that level, then you should go back and see if that level was a resistance or support in the past. Especially when you have those candlestick patterns. Immediately you see an hammer or you see inverted hammer, just go back to confirm if that level was a resistance or support in the past. So look at what I did here. After the close of this spinning top, it's a bullish spinning top. The next candlestick closed bearish. I identified this level as resistance. Now let's go back. Was this level a resistance in the past? Yes. Look at this level. You can see it here. You can see it was a resistance in the past. This tells you that there's a probability that price will drop from that level. And what happened? It dropped because this level was a previous resistance level. Can you see that? So when you identify a new support or resistance, like what I did here, we identified this level as our support. When we went back, we saw that you can see it was the previous resistance on support. Can you see that? Even if you go back here, you will see here, you can see it was a resistance here. It was a resistance here. So that level has acted as a resistance on support in the past. So there's a high probability that it will play out if today's candle closes bullish. I hope you are following. Okay, so that is how. Let's look at other pairs. Let's look at gold. Like I said, if you're trading with resistance and support, identify those levels on higher time frame, not lower time frame. So let's start with daily as day traders. So let's look at the daily. So what do we have on the daily time frame? What do we have on the daily time frame? So today's candle is likely going to close strongly bearish. Okay, it's likely going to close strongly bearish. So at this point, we had a resistance on support, right? We also had a resistance here, which became a support. And the market is currently trading below that support zone. This tells us that we have more supply than demand. You cannot buy gold at the current market price. This is a bearish setup on gold, but it's possible for price to pull back. Okay, so at what point would price pull back? Okay, at what point? We had a support here. This is a support. We had a support here. And we had a support here. These are the possible areas where gold might experience a pullback. These are the possible areas. This support, this, or this. Okay, so now price has tested this support. What is the probability that price will pull back from this level? We cannot jump in and buy. We will only buy when we have a bullish reversal pattern at this support level. That is when we'll risk buying. Are you with me? Let's go to 4 hour. What do we have on 4 hour? So look at 4 hour. 4 hour also is still bearish. This is not a valid hammer. It's not a valid hammer, so we cannot jump in and buy. So it's still bearish on 4 hour. If we go down to 1 hour, let's see what we have on 1 hour. 1 hour also is still very bearish. There is no bullish reversal pattern on 4 hour, 1 hour, and daily time frame. So we cannot buy. So gold is still bearish at the moment. So it's possible it will break out from this support. It's possible. So it's bearish at the moment. We cannot buy. So if it breaks that support, it will aim for the next support level. If it breaks this support, the next target will be this support. So if price gets to this support, we want to look out for a bullish reversal pattern at this support level before we buy. And if it breaks that, aim for this next support level. So when price gets to this support level, we look out for a bullish reversal pattern. I believe you know those patterns. We look out for those patterns at this level. That is when we would what? We would buy gold. But at the moment, gold is bearish. Gold is what? Is bearish. Okay, let's look at another pair. Let's look at JPY, GBP JPY. GBP/JPY. Let's start with the daily. So you can see last Friday, candle closed as a bullish candle. And after the close of that bullish candle, we had a support here on daily time frame. Okay. This is support on daily time frame. If we go down to 4 hour, the support on 4 hour might be different from the support on daily. This will be our support on a daily, on 4 hour time frame. This is the support on 4 hour time frame, because this is where price starts going up on 4 hour. This is where price starts going up. But on daily, price starts going up at this level on daily time frame. So let's go back to daily. So what happened after the close of the bullish candle? As you know, this is an hammer. This is an hammer. Okay, this candle is called hammer. So if you go back after the close of this candle, identify the support level. If you go back, was that level a support in the past? Can you see that it was a support? It was a support at this level. It was a support at this level. It was a support at this level. Can you see that? So because it has acted as a support in the past, there's a high probability that it will play out. There's a high probability that it will hold. And what happened today? GBP/JPY was bullish. Can you see that? Over 270 pips on GBP/JPY today. So if you had applied support level and candlestick pattern, you would have caught this move on GBP/JPY. I hope you get that. So what is the trend on GBP/JPY at the moment? Sell or buy? Sell or buy? So where is price now? Price is currently, I think you can see we had a resistance here. You can see we had a resistance here. And market just tested this resistance level. Resistance here, resistance here. Now, would this level hold? There has to be a bearish reversal pattern. If I'm to sell, there has to be a bearish reversal pattern at this level. So this is daily. Let's go down to 4 hour. What do we have on 4 hour? Do we have bearish reversal pattern on 4 hour? No. It's not a bearish reversal pattern. Let's go to 1 hour. What do we have on 1 hour? Okay, we have bearish reversal pattern here on 1 hour, indicating change in trend from bullish to bearish. So on 1 hour, we had a resistance here on 1 hour. This is the resistance on 1 hour. So if I decide to sell GBP/JPY at the current market price, my stop loss will be at this level. Anything that makes a candle breaks out or close above this level, then I should be out of the trade. I should be out of the trade. So my stop loss will be at this level. And my TP could be at this support. So when you're trading with support and resistance, when you are selling from a resistance level, your take profit should be at a support level. Please note that down. When you are selling from a resistance level, your take profit should be at a support level. So if I'm selling GBP/JPY from this point, my first TP will be this support. This is the first support. So my TP will be at this support. If this support is broken, my next TP will be this support. This is a support, right? It was a resistance at this level. After this candle broke out from that resistance, this level became a support. So this will be my next target if this level is broken. So at the moment, going by 1 hour time frame, we have a bearish setup. This is a bearish setup on 1 hour time frame. But the long-term trend or the long-term direction for GBP JPY is bullish. If you are selling, you are trading against the trend. You just want to take advantage of the pullback. If you're selling, with what we have on the daily and weekly, GBP JPY is bullish. It is bullish, but you can still make some profits selling GBP JPY. But you just know that you're trading against the trend. Okay, and when you're trading against the trend, your risk reward shouldn't be too high. If you're trading against the trend, for example, if you're trading along with the trend, your risk reward could be as high as 1:3, meaning you are risking $1 to make $3. But when you're trading against the trend, your risk reward shouldn't go above 1 to 1.5 because you're trading against the trend. I hope that is clear. Let's look at one more pair before I'll take your questions. So let's look at Australian dollar USD. What is the trend on Australian dollar USD? What is the trend? At the moment, it is bearish. Reason? After the close of last week candle, we had a resistance, right? After the close of last week candle, this level became a resistance level. And if you go back, was this level a resistance in the past? We had, this is a support stone resistance, right? That was a support stone resistance. We also had a resistance here. Right? So this is a resistance zone. So there's a high probability that this resistance is going to play out, it's going to hold. Let's go back and see if that level was a resistance in the past. You can see here, this is a resistance, support, turn, resistance, right? Support, this candle broke out, this level became a resistance. So you can see that level was the resistance in the past. You can see that, okay? So there's a probability that that level would hold. So this week, I'm considering selling Australian dollar USD because we have a resistance here. My bias will change if this resistance is broken. My bias will change from bearish to bullish if this resistance zone is broken. Okay, so that is it on the weekly time frame. Let's go down to daily. What do we have on the daily? So you can see what we have on the daily. This is today's candle. Okay, so after the close of, I think it was Wednesday, we had this support here, right? After the close of this bullish candle, this is an inverted hammer. The next candle closes bullish. So on a daily, what we have here is a bullish bias. This is a bullish setup, right? This is an inverted hammer. The next candle closed bullish, so we should look for opportunities to buy. Also, we had a support, you can see at this level. You can see that is the reason for this pullback. You can see if you go back here, it was also a support. So there's a high probability that this support level would play out. So if I'm to take any trade on Australian dollar USD now, it will be buy. Weekly says sell. So when would I sell? I would sell if this support is broken. That means a candle must close below the support before I sell. But at the moment, if I want to take any trade, it has to be buy. I won't sell until this support is broken. I hope you all are following. I hope you all are following. Mr. Segun Adeoye, can you hear me?
Yes, sir.
All right. So I want to assume you all can identify resistance and support level, and you can trade using support and resistance level. But let me take your questions. Let me start with Mr. Segun. Mr. Segun.
I don't have a question for now.
I didn't hear you.
I don't have a question for now, sir.
Are you an experienced trader?
Sir?
Are you an experienced trader?
No, that's all.
It's your first time?
This is my first time of joining this summit.
Okay. Please send me a message on WhatsApp. Send me a message on WhatsApp. I would like to have your number. Okay. And for those of you who are yet to open a trading account, I would want you to do that after this class. Okay. I want you to open a trading account. If you are just attending classes and you are not implementing what you are being taught in the class or what you learn in the class, you might just be wasting your time. If you want these things to stick, you need to start trading. So I would employ that you open a trading account with Cabana Capitals. Do that after this class. You don't have to fund your trading account. We have a demo account for those of you that are new, that don't have experience in trading. Start with a demo account, okay? Open a demo account, download on your phone and start trading. Okay?
Okay, sir.
So, Mr. Segun, let me drop my number so that you can see it on the screen. For those of you who are new, please send me a message on WhatsApp so that I can send you a link for registration, and also I'll send you videos for previous classes that we've had. Okay?
Okay, sir.
Who has a question? Mr. Emmanuel, you can unmute your mic. If you have a question, Mr. Emmanuel. Mr. Emmanuel, unmute your mic. Hello? Mr. Godwin, unmute your mic.
Good evening, sir.
Good evening.
Sir, I just want to inquire, can I start with 15 minutes and trade on 5 minutes? Can I do my analysis on 15 minutes, then trade on 5 minutes time frame?
Yes, you can. You can, but like I said, if you're trading with resistance and support, those levels should be identified on daily 4-hour time frame. If you're a scalper, if you're trading 15 minutes, 5 minutes, means you are a scalper. Okay?
Yes.
You're a scalper, so
yes.
You should identify. For example, if I'm a scalper, I would work with, if I'm as a day trader, I would work with 4-hour time frame as a scalper. Okay, I'll work with 4-hour time frame, or let's say 1 hour. Okay. So for example, this was a resistance level. After the close of this candle, this level became a resistance level. Okay, so if I'm to buy after the breakout of this resistance, I don't have to wait for 1 hour to close above this resistance before buying. After identifying the resistance level, I can just go down to 5 minutes. Okay, let's go to 5 minutes. I can just go down to 5 minutes. So on 5 minutes, this was the first candle that closed above this resistance. So I should have entered buy from this level, and my stop loss will be around this level as a scalper. Okay, but if you're identifying this resistance and support level on 15 minutes and 5 minutes, you would experience a lot of fake outs, false breakouts, false pullback. You would experience a lot of that on these lower time frames. But if it's something you have mastered, you can trade with it if you're making profits consistently with it, you can.
Yeah. Understand.
Oh, do you get it?
Yes, understand.
All right. Any other question? Mr. Emmanuel,
No,
I don't know
no.
what's happening. Maybe it's your network. I know you're talking, but I can't hear you, Mr. Emmanuel. Mr. Mayor, do you have any question?
Yes, sir. Good evening.
Good evening, sir.
Yes, sir. I've already have an account before.
Okay.
I just want to
Please
know
mute your mic if you're not the
maybe.
one talking. Mute your mic. Mr. Emmanuel, mute your mic. Mr. Shekin, please mute your mic so I can hear him well.
So I want to know maybe you have a place you are dropping signals after creating accounts with the broker you mentioned now.
If your account is funded, you get
Yeah,
signals.
yeah. I've
If your
already have
account is
account.
funded, you should have a minimum of $200 in your account to follow the signals.
Okay, but not with the broker you mentioned. No, I've already been traded before. That's why I just said, is it
No, it
compulsory
has to
to
be
open
with
up?
Carbona Capitals.
Okay.
Okay, but we do have market analysis session on Sunday, on Monday, and Tuesday.
I do attend very well. I do attend very well.
Okay. So if you want to be getting the signals, then you need to open an account and fund with Carbona Capitals.
Okay, I'll work on that.
Okay.
Thank
There are
you.
a lot of benefits or service you get from Carbona Capitals that you don't get from other brokers. Okay. The broker that you operate with, do they charge you swap?
No. They don't charge swap.
Which broker is that?
I'm using XNES.
Okay, they don't charge you swap?
No. They don't charge any
commission. Over commission?
No.
Carbona Capitals offers you swap-free accounts, and our spread is very, very competitive. Very. Okay, so you might want to consider using Carbona Capitals.
Okay. So please, is the 200 the minimum? At least, with things going on now, at least someone want to do and don't have to up to that. That's why I
didn't hear you, sir. I didn't hear you.
About the minimum.
I didn't hear you.
About the minimum. Is it 200 the minimum? Is it 200 the minimum?
To follow signals, you can fund with whatever amount. But if you want to follow signals, you should have a minimum of $200 in your trading account.
Okay, no problem. Thank you.
Do I have your number? Mr. Mayor,
I don't.
Send me a message on WhatsApp. Send me a message on WhatsApp.
I have no. At least I have no. Okay.
Send me a message on WhatsApp, please.
Thank you.
You're welcome. Mr. Joseph, do you have any question? Mr. Joseph, do you have any question?
Yes, boss.
You have question?
Yes, sir.
Okay, your question.
Okay. My question is based on the support and resistance zones. Now, we notice, yes, I understand that you said if we identify our support and resistance zone, we should identify it on a higher time frame. That makes it very strong and a valid support and resistance. But now I noticed that sometimes when you identify the support and resistance zone and you have marked them out, maybe you take a trade after. Sometimes you do a back test and discover that in the past, price actually respect that zone, and now price have actually come back to retest that zone. You now notice that okay, you guys have retest the zone and you are taking a trade from that zone, but you come to notice that price is actually breaking that zone. So I don't know what are the measures to that we can set in place to at least cut out this kind of this thing that is actually happening for you to at least be preservative at those zones.
Okay. As you know, trading is a game of probability. Okay. In technical analysis, we believe history would always repeat itself. right? But the truth is that sometimes these levels would not hold. Sometimes it would not hold. So if out of 10 times those level holds, let's say 6, 7 times, we can say that system is effective, right? We don't expect to win or expect price to play out or move in that direction 100% of the time. So when price tests a support or a resistance level and you think price or that level will hold and you execute a trade based on that support or resistance, and that's why you have stop losses. Okay, so you set your stop loss. If that level does not hold, you get out of that trade. And it could be at the time you executed the trade, it could be that a major news was released. That is the reason that support or resistance level will not hold. Do you get it?
Yes, sir, I'm getting you, sir.
For some weeks now, I've been expecting gold to sell, but it's been bullish. Why? The ongoing war between Israel and Palestine is influencing gold. Do you get it? That was why you see that previous month or previous weeks, gold broke the previous highs. It could be fundamentals that will make those levels not to hold. I hope you get me.
Yeah, I'm getting you, sir.
And it could be that the financial institution came into the market and they injected huge funds into the market at that point. So those levels will be broken. It will be ignored. Do you get it? It won't hold. So you just take that loss and wait for the next, setup.
Because thing I've been experiencing, yes, is one of the things I've been experiencing so heavily in the market.
Fundamentals like this week now, we have a lot of fundamentals that will be released this week. From tomorrow is CPI. From tomorrow to Friday, we have lots of news that will be released, and that would influence price action. So support and resistance level can be ignored. Do you get that?
Yes, sir. Yes,
so if you identify a support level and you bought from that support level and price break that support level, you should just know it's fundamentals that is influencing that movement. So you just take that loss and leave.
Okay.
Do you get it? So remember, there are two major ways to analyze the market: fundamental, technical. So if you're just a technical trader, most times your technical setup will not play out.
Okay.
Do you get it? So just be willing to take that risk. Once the market hits your stop level, exit the trade and wait for the next setup. But it's important that you know the reason that level didn't hold. That's why I always advise, if you're a technical trader, also look at the calendar to know the news that will be released, so that if a support or resistance don't play out, you know, okay, the news was released. That was the reason that level didn't hold.
But sir, in a scenario whereby there was no fundamental and a level is not holding, now how do we identify what's actually the reason why that level didn't hold?
That's why I said it could be institutions. Okay. If institutions inject huge funds into the market, it will influence it. And so it's either institutions or fundamentals. It's not all news that we see on these calendars. Right? Not all news is available on this Forex Factory and investing.com. If the president of the United States wants to give a speech, he doesn't have to, you can just wake up and just give a speech that would influence the market,
market,
negatively or positively. We can't see that on Forest Factory. It wasn't even planned.
Yeah.
Do you get it? When
Yes,
Trump
sir.
was there, every tweet
Every
had an
now
impact on
and
the
then.
market. So you
True.
see price was very volatile. Price action was very volatile when Trump was on seat, because every minute, every hour, Trump. Okay,
It's
and
true.
those kind of news, we are not prepared for them. So there is a lot of things that influences on price action. The only thing we can control is how much we lose on a trade. That's the only thing we have control over. Okay.
Thank you so much, sir.
You're welcome. Any other question, Mr. Joseph? Any other question before I move to the next person?
No, sir. For now, no.
Lillian and Lynn Rossi, you came in late. You're welcome.
Thank
We
you.
are
For good
rounding up.
evening.
You get the replay. What?
Thank you, sir.
You're welcome. You get the replay.
Okay, thank you.
You're welcome. How to trade fake out to be profitable, sir? I was told there is a strategy for that. I need some light on that. Fake out, how to trade fake out. I don't have a strategy on trading fake outs. Fake out is unavoidable. It's unavoidable. Okay, it's unavoidable. You definitely experience fake outs on some of your setup. You definitely experience fake outs. Okay, just be willing to take that loss. Be willing to take that loss. So I don't have a strategy for fake outs. How do we trade NFP, CPI? I'm not a fundamental trader. I'm a technical trader. Okay, I'm a technical trader. Okay, if you want to trade the news, just compare the previous value with the actual value. If the actual value is higher than the forecast value, it will be positive for the currency. If the actual is less than the forecast, it will be negative for the currency. Most people trade, 90% of traders who trade news just gamble. Okay, they just gamble, they just try their luck. It will work out for them and it will go against them. So what do they do most times? Most of them, they use pending orders. They set two types of orders, buy and sell. They do that few minutes to when the okay. So they set a buy order and a sell order. So for example, tomorrow CPI news will be released, I think by 2:30. Okay, CPI news will be released by 2:30. So what I need to do is look at the forecast value. Okay, and then when the actual is released, I would compare the actual with the forecast. So a few minutes, let's say 5 minutes to the time the news will be released, I would set two orders, buy and sell. Okay, so let's assume this is the current market price before the news is released. That would be, let's say GBP USD. Let's say this is the current market price before the news is released. Let's say the actual is higher than the forecast. So I expect US dollar to gain value if the actual is higher than the forecast. Okay, so what would I do? I would be looking for a sell opportunity. Let's go to Forest Factory. So if the news favored dollar, I want to sell GBP USD. So if this is the current market price on GBP USD before the news is released, okay, let's go to be 15 minutes. Let's go to this 15 minutes time. So let's say this is the so let's say this is the setup before the news is released. Let's say 5 minutes before news is released. This is what we have on the chart. So I will set a buy stop and a sell stop order. Buy stop, if price breaks this resistance, buy. And I could set my sell stop at this level. If price hits this level, sell. If price hits this level, buy. Okay, so that's how most traders trade the news. They will place a buy order and a sell order. Immediately one of these orders triggers, they would close the other order. I hope you get that. That's how most traders trade the news. This strategy is called, what is it called? Straddle strategy. Straddle. Okay. So let's check the calendar.
Hello, boss.
Yeah.
But like this straddle order you just talked about.
Straddle strategy.
Straddle strategy.
Yeah.
Now, when the news is released, you notice that sometimes the news will be released and you see price fluctuate to the downside, and immediately it also fluctuate to the upside. At this point, what happens if price actually pick both the buy and the sell order?
You take the loss now. If both hit stop loss, but it's possible one would hit TP, the other would hit stop loss. So at the end of the day, you could break even or make little profit. Do you get it?
Yes, sir.
Why I don't recommend trading the news is that a lot of manipulation takes place during news release.
Yes.
Most traders have been executed during news release is executed based on fear and greed. That's why you see that price action is always erratic after news is released. So if you are not a fundamental trader, ignore trading the fundamentals, ignore trading the news. Just trade your setup. Just trade your setup. Whether there is fundamentals or not, trade your setup. Once your setup shows up on the chart, execute the trade, set your stop loss, set your take profits. Well, for example, we're expecting a major news from US tomorrow by 2:30. I might not trade USD pairs tomorrow because of the major news. Are you with me? I might not trade USD pairs. I'll rather trade cross-currency pairs like the Euro Aussie and JPY pairs.
So, sir,
now the USD news would still impact other currency pairs, but it will have a higher impact on USD pairs.
And low impact.
Hope you get that.
And low impact on other pairs.
Yes, yes, but it will still have impact on other pairs. So tomorrow, 8 a.m., we're expecting news from Great Britain, and 2:30 we're expecting. So let's look at the forecast. The previous value was 0.2, and the forecast value. So they're expecting the value to increase from 0.2 to 0.3%. So what we're waiting for is the actual value. If the actual value is higher than the forecast,
open the back door,
USD would gain value.
Close.
Please mute your mic if there is noise at your end. Okay, so if the actual is higher than forecast, we would buy USD. Okay, we would buy USD. So if you are trading USD pairs and you're a technical trader, I would advise that you wait for the news to be released before you execute your technical setup. That's my advice for technical traders. If you want to trade USD pairs tomorrow, wait for the news to be released. From Asian session to the time the news will be released, there is a high probability that price will just be in a range. There will be no clear direction before the news is released. So don't risk your money before the news is released. Wait for the news is released. After 30 or 1 hour, if you have a good technical setup, you can execute your trade. That will be the best time to risk money, not before the news. CPI is a very volatile news, very volatile news. Just like Mr. Joseph said, it's possible you set both orders and price will hit the stop loss on both orders. Okay, so if you're a technical trader, please trade after CPI is released. Any other question, Mr. Raw? Mr. Raw, are you still in the class? Mr. Tunde, any question from you?
No, sir.
No question. Mr. Roy, any question from you? Mr. Roy, if you can hear me, I'll mute your mic. So that will be all for tonight's session, if there are no questions. Mr. Roy, can you hear me?
Hello, sir. Hello, sir.
Yeah.
Hello, sir.
I can hear you, ma.
Okay.
I can hear you, ma. Lynn Rossi, I can hear you.
Okay. Okay. Sorry, I didn't know. Sorry. Please, I want you to find the time for the CPI news again.
The time?
Yes, for the CPI news.
2:30 p.m.
Before 8 p.m. So you mean the London said nothing is going to happen there. It's not good to trade in the morning.
Not good. Not good. I would advise you to wait for the news to be released before you trade.
Okay. All right. Thank you.
It's risky to execute a trade before the news is released. Okay.
Okay, great.
I didn't hear you.
Well, we can be watching the chat.
I don't know what's happening. Maybe it's my network or your network. You're going on and off.
I mean,
what was the question?
But we can be watching the chat.
Yeah, sure.
We can be watching.
Yeah, sure. I'll definitely be watching the chat. I will definitely be watching the chat. Yeah.
Okay.
Yeah.
All right. Thank you.
You're welcome. So please send me your email address so that I can forward the replay to you. All right. Thank you for your time.
I always get it in the morning. Okay. I can send it, yeah?
Yeah, you can send it to me on WhatsApp. You have my number, right?
Will you get it?
Ma?
No, please.
This is my number. My number is on the screen.
No, please. Can I get?
It's on the screen.
Right now, okay.
It's on the screen. 0803788.
Yeah, okay, I've seen it. Thank you very much.
Please, if you are yet to open an account with Gabona Capitals, do that. Open a demo account, go to Play Store or Apple Store, download MetaTrader 4 and start trading.
No, I've been trading. I've been trading. I'll
Good,
be
good.
blowing my account.
Good.
All right.
We
I
all
just
went through
started
that phase.
following you
Blowing
recently.
account is the normal thing, but with time you outgrow that.
Yeah.
Yes, it's a training. We are not
Yeah.
trained to
I always know
take losses, and in this game,
I learn more.
losses are inevitable. We learn from those losses. The truth is that we learn more from losses than winning trades. It's those losses that makes us stronger,
honestly,
that makes us fearless. You need to get to that level that you
yes, exactly.
see losses as normal. See losses as normal. Yeah. So it's a training.
Right.
It's a training. But most traders, most people are not patient enough to undergo that training. That's why they give up so soon. So it's normal. It's normal. To get to a point, you will see losses and you'll just be laughing. Because you will recover the losses and make more profits. We all paid the price. We paid the price. There is no successful trader you see today that didn't blow account. We blew account.
Yeah.
It's okay, ma. All right.
Thank you very much. All right.
Lila, you said something?
I said you have my own email.
Yes, I have it.
Please, can I have yesterday and today's class?
Write it down for me.
All right, thank you, sir. Thank you, I appreciate it. God bless you.
Amen. So I'll send you that tomorrow. Okay? All right, good night.
Good night, sir. Have a nice night.
Night.
Excuse me, sir.
Okay.
Hello. Sir, can we trade on MetaTrader 5?
Yes, you can use MetaTrader 5. Yeah, sure.
Okay, no problem. Thank you.
All right. Good night.